The bearish argument for Vitesse Energy is based on the premise that the current valuation is unsustainable, the dividend is at risk, and the macro environment for oil prices is entering a multi-year downturn. Valuation. Vitesse Energy currently trades at a price-to-earnings ratio of approximately 43.7x to 46.2x, which is extremely high for the energy sector. For context, the sector average PE ratio is closer to 14.6x. Bearish analysts argue that this valuation is unsustainable, particularly as earnings are forecast to decline by an average of 85.7% per year over the next 3 years. The EIA's lower for longer forecast. If oil prices fall toward $53 per barrel by 2027, the free cash flow generated by Vitesse's assets may be insufficient to cover the $2.25 annual dividend, leading analysts to suggest a potential dividend cut. Non-operator dependency risks. Despite the Lucero acquisition, Vitesse remains predominantly a non-operator, which carries inherent risks. Capital discipline leakage. If major operators prioritize share buybacks over drilling in a low-price environment, Vitesse's production will decline naturally through depletion. Lack of cost control. Vitesse is a price taker regarding lease operating expenses, which rose 14% year-over-year in Q3 2025. The bullish argument for Vitesse Energy centers on its ability to offer a 10% plus dividend yield backed by a technologically superior, low-leverage model that is entering a favorable regulatory period. Yield leadership and management alignment. VTS currently offers a trailing yield of approximately 10.5%, significantly outperforming the broader energy sector and the S&P 500. This yield is supported by a management team that is highly aligned with stockholders, owning more than 25% of the outstanding shares. The bull case suggests that Vitesse is the premier vehicle for capturing back-end cash flows without the operational risks of a traditional driller. Regulatory and policy tailwinds in 2026. The regulatory environment in 2026 is a major component of the bull thesis. The Trump administration has implemented several policies designed to streamline federal oil and gas development.
Streamlined leasing rules. In January 2026, the USDA Forest Service and BLM finalized revisions to oil and gas leasing rules, which simplified federal procedures and reduced duplicative analysis. Infrastructure expansion. The administration has prioritized LNG export expansion and pipeline development to support data center demand, helping alleviate takeaway constraints for Bakken producers. Fiscal support. Legislative measures in 2025 and 2026 have offered fiscal support through reduced royalties and bonus depreciation, enhancing the profitability of new drilling projects. Inventory and geological upside. The bull case also points to the USGS's massive resource upgrade and the emerging potential of the Middle Three Forks. With 80% of its assets comprised of undeveloped resources, Vitesse has a long runway of high-quality locations. The company's ability to participate in highly productive 3- and 4-mile laterals allows it to benefit from high-margin barrels in the basin. Company overview. The structural emergence of Vitesse Energy as a discrete, publicly traded entity in early 2023 marked a significant transition in the specialized subsector of non-operated oil and gas interests. Historically, the non-operated working interest model was often perceived through a lens of passivity, where financial participants merely provided capital to operators in exchange for a fractional share of production. Vitesse, however, was founded upon a more aggressive philosophy of active management, a strategy developed over a decade as a private equity-backed vehicle, before its successful spin-off from Jefferies Financial Group in January 2023. This transition was not merely a change in corporate structure, but a strategic move to provide income-seeking investors with a vehicle optimized for capital velocity and cash flow distribution.
The company's foundational roots trace back to 2013, with an initial equity investment of $50 million that was subsequently scaled to $500 million by 2018. During its private phase, the management team, led by Chairman and CEO Bob Garrity, focused on the North American energy sector's most prolific regions, specifically identifying the untapped potential of the Williston Basin as early as 2010. Between its inception and the eventual spinoff, the entity returned approximately $124 million to its private stakeholders, establishing a track record of disciplined capital allocation that would define its public identity. Upon its debut on the New York Stock Exchange, Vitesse Energy positioned itself as a yield-focused asset, analogous in some financial respects to a real estate investment trust or a master limited partnership, yet operating within the high-beta environment of upstream exploration and production. The corporate mandate is explicit. The primary goal is to return capital to stockholders through a robust and growing dividend. This objective is supported by a lean corporate hierarchy, where every decision, from participating in a single well to executing a multi-million-dollar acquisition, is scrutinized for its impact on shareholder returns. The core of the Vitesse investment thesis lies in its non-operator business model. Unlike traditional integrated oil companies or independent explorers that physically drill and operate wells, Vitesse primarily acquires fractional working and royalty interests in projects managed by premier U.S. operators. This approach allows the firm to participate in high-quality drilling projects while maintaining a significantly lower overhead than an operating company. The active management of non-operated assets is the primary differentiator for Vitesse. While non-op is often equated with passivity, Vitesse views each well as a discrete investment, frequently referred to within the firm's culture as a kid in the class, whose performance must be individualistically monitored and optimized. This scrutiny extends from the initial authorization for expenditure to the post-closing forensic analysis of revenue and expense lines. The company's land, accounting, and legal teams perform what they describe as fly-specking of each lease and contract to ensure that every dollar of value is captured, which is particularly critical in a basin where thousands of wells generate over 100,000 lines of financial detail each month.
A critical component of this model is the mitigation of operational risk through diversification. Vitesse holds interests in over 7,600 gross producing wells, but its average working interest per well is approximately 3.6%. This strategy ensures that no single mechanical failure, drilling delay, or operator-specific issue can significantly impair the company's overall financial results. By partnering with over 30 leading operators, including industry giants like Chord Energy Corp., Devon Energy Corp., EOG Resources, and Continental Resources, Vitesse effectively outsources the technical risks of drilling and completion to the most efficient players in the industry. The name Vitesse itself is derived from the French word for speed, signifying the company's focus on the velocity of capital compounding. The business model is designed to transform undeveloped drilling locations into revenue-generating assets as quickly as possible. By focusing on established plays like the Bakken and Three Forks, where infrastructure is mature and geological risk is relatively low, the company can deploy capital into wells with predictable production curves. Attributes of the Vitesse non-operator model compared to traditional E&P operators include operational control, low for Vitesse as it depends on third-party schedules, compared to high control for traditional operators who direct all drilling and production. Corporate overhead, low for Vitesse due to a lean, data-driven staff, whereas traditional operators require high overhead for rigs, crews, and heavy G&A. Risk profile, diversified for Vitesse across more than 7,600 gross wells, while traditional operators face concentrated risk in specific projects. Capital allocation, primarily focused on capital returns and dividends, contrasting with traditional operators who focus on production growth. Key asset, for Vitesse, the key assets are data, royalty interests, and strategic partnerships, while traditional operators rely on rigs, technology, and acreage. The geological engine, stratigraphic superiority in the Bakken and Three Forks formations. Vitesse Energy's asset base is geographically concentrated in the core of the Williston Basin, primarily within the Bakken and Three Forks formations of North Dakota and Montana. This region is not only one of the most productive oil-bearing provinces in the United States, but is also currently undergoing a geological reevaluation that suggests significant untapped potential.
In early 2026, the United States Geological Survey, USGS, released an updated assessment of the Bakken and Three Forks formations, revealing a twofold increase in estimated undiscovered, technically recoverable oil compared to previous estimates. The new assessment identifies a mean of 7.4 billion barrels of oil across the two formations, with the Bakken holding 3.65 billion barrels and the Three Forks holding 3.73 billion barrels. For a company like Vitesse, which holds interests in 50,000 net acres in the heart of this basin, these findings essentially expand the potential inventory life and ultimate recovery of its acreage without requiring further land acquisition. Of particular strategic importance is the emergence of the Middle Three Forks Reservoir. State geologists in North Dakota documented hundreds of millions of barrels of undeveloped recoverable petroleum deep under the existing Bakken fields in 2024. Estimates suggest that developing the Middle Three Forks could add 1 to 2 million barrels of recoverable oil per 1,280-acre drilling unit. Currently, only about 2% of total production in the Bakken Three Forks system has come from the Middle Three Forks unit, and state experts are urging a doubling or tripling of drilling activity in this zone. Vitesse's significant position in McKenzie County, North Dakota, places it directly in the path of this potential developmental surge. The economic viability of the Bakken has been further enhanced by shifts in well architecture. Vitesse management has noted that technological improvements, specifically the performance of 3- and 4-mile laterals, continue to enhance asset value. These extended laterals allow operators to contact more of the reservoir with a single wellbore, significantly improving the capital efficiency of each well. Much of this extended lateral drilling is occurring in areas where Vitesse has its most concentrated acreage positions, allowing the company to capture these efficiency gains as a non-operating participant. Technological Alpha, the Luminous proprietary data ecosystem and the integration of generative AI. While Vitesse is an energy company, its internal operations are more akin to a fintech or data analytics firm. The centerpiece of its competitive advantage is Luminous, a proprietary, custom-built software ecosystem.
Luminous is a central repository that integrates data from accounting, land, engineering, and operations teams. In a non-operated model, the primary challenge is the volume and fragmentation of data coming from dozens of different operators. Luminous allows the test to model opportunities and analyze 6,000+ wells per month with the same level of human effort, enabling the company to scale its asset base without a proportional increase in general and administrative expenses. Recognizing the shift toward data-driven energy markets, the test has augmented Luminous with artificial intelligence and machine learning. The system uses AI to identify patterns and trends in large datasets, such as subtle shifts in lease operating expenses or production decline rates that might be undetectable by human analysts. Furthermore, an internally developed AI chatbot allows Vitesse employees to interact with the database using natural language, providing immediate clarity on complex financial and operational questions. Luminous performs several critical functions. Forensic revenue analysis. It isolates and identifies discrepancies in revenue and expense lines from operators, ensuring Vitesse receives its full contractual entitlement. Acquisition evaluation. It refines the evaluation of potential interests during the due diligence process, identifying undervalued assets that fit the company's return profile. Capital allocation optimization. It provides real-time modeling of potential well participations, allowing management to rank opportunities based on their projected impact on free cash flow and dividend sustainability. The hybrid pivot, strategic implications of the Lucero Energy Corp acquisition. On March 7, 2025, Vitesse Energy completed a $222 million acquisition of Lucero Energy Corp. This move represented a fundamental pivot from a pure non-operator model to a hybrid operational model.
The Lucero transaction added over 65 operated wells and 50 undeveloped locations to the Vitesse portfolio. This shift provides Vitesse with an operational leg, granting the company direct control over development timing and capital deployment in a portion of its acreage. This flexibility is vital during periods of commodity price volatility, as the company can choose to accelerate or decelerate its own drilling programs rather than being entirely beholden to the schedules of third-party operators. The acquisition was designed to be immediately accretive to key financial metrics, including earnings and cash flow. Following the close of the transaction, the Vitesse Board of Directors announced a 7% increase in the quarterly cash dividend, raising it from 525,000 to 562,500 per share. This increase reflected both the enhanced cash flow profile of the combined company and management's confidence in the synergies derived from integrating the Lucero assets into the Luminous ecosystem. The integration of Lucero's assets allowed Vitesse to apply its technological insights more broadly, improving overall asset performance. Furthermore, the acquisition increased the company's production by approximately 35% at the midpoint for 2025 compared to 2024 levels. It also added a significant inventory of undeveloped locations that Vitesse can now develop at its own discretion, high-grading the overall portfolio quality. Operating expenses during the quarter showed a mix of inflationary pressures and corporate efficiencies. Lease operating expenses rose to $11.05 per BOE, a 14% increase from $9.71 per BOE in Q3 2024. Conversely, general and administrative expenses fell to $3.44 per BOE, a 21% reduction compared to $4.37 per BOE in the prior year. This reduction in G&A on a per-unit basis validates the company's claim that its data-driven model allows it to scale production without a commensurate increase in corporate headcount.
In late 2025, Vitesse management upwardly revised its full-year guidance, reflecting stronger-than-expected organic activity and the success of its operated drilling program. Annual production, 17,000 to 17,500 BOE per day. Oil as percentage of annual production, 65% to 67%. Total capital expenditures, $110 million to $125 million. Vitesse Energy's central appeal is its aggressive dividend policy. However, as of late 2025, the sustainability of this dividend has become a focal point of debate among market participants. Vitesse currently pays a quarterly cash dividend of 0.5625 per share, amounting to an annualized payout of $2.25. Since its spin-off in early 2023, the company has returned $6.325 per share in dividends to its stockholders. The board of directors maintains full discretion over the dividend, making decisions based on financial conditions, capital requirements, and prevailing industry practices. A critical forensic analysis of the company's cash flows for the 9 months ended September 30, 2025, reveals a potential coverage deficit. During this period, dividends paid exceeded generated free cash flow. While the company benefited from a $49.8 million cash influx associated with the Lucero acquisition to help finance its overall activities, the reliance on such one-time events or debt to fund a recurring dividend is a point of concern for sustainability. Despite the coverage gap, the test maintains a robust balance sheet. As of September 30, 2025, the company had $5.6 million in cash and $114 million in borrowings outstanding on its revolving credit facility. The company's net debt to adjusted EBITDA ratio remains low at 0.65x, well within management's target of staying below 1x. In October 2025, the company completed its semi-annual redetermination of its revolving credit facility. Due to the lower commodity price environment, the borrowing base was reduced from $315 million to $295 million, though elected commitments were reaffirmed at $250 million. This provides Vitesse with total liquidity of approximately $141.6 million, giving it a sufficient buffer to manage short-term cash flow volatility.
To counter these risks, Vitesse employs a rigorous risk management strategy that extends beyond its non-operator diversification. Vitesse hedges a significant portion of its production to increase cash flow predictability and support the dividend. As of late 2025, the company had approximately 60% of its remaining oil production hedged at a weighted average price of $69.99 per barrel. For 2026, the company has secured the following crude oil swaps. Q1 2026, 406,791 barrels at $66.94 per barrel. Q2 2026, 377,509 barrels at $66.94 per barrel. Q3 2026, 226,779 barrels at $65.50 per barrel. Q4 2026, 213,155 barrels at $65.52 per barrel. Vitesse mitigates risk by spreading its interests across more than 30 operators and multiple benches of the Bakken and Three Forks. This ensures that no single operational disaster or regional disruption can compromise the company's ability to meet its financial obligations. Conclusion: Vitesse Energy represents a bet on the efficiency of the North American shale engine and the power of data analytics to extract value from non-operated assets. The bull case is anchored in the company's 10% plus yield, its 25% insider alignment, and its technological lead via Luminous. The massive USGS resource upgrade and a regulatory environment in 2026 designed to accelerate development provide significant tailwinds. The bear case rests on the fact that dividends are currently exceeding free cash flow, oil prices are trending toward the low $50 for 2027, and the stock's valuation is significantly higher than its peers. Vitesse Energy's future will depend on whether its technological arbitrage and active management can defy the broader industry cycle of price and earnings compression.